Hi everybody, welcome to the Baguette Investor channel for a new week. As every single Monday for almost a year now, I'm reviewing my portfolio holdings, reviewing the trades I made, and doing technical analysis over the interesting assets that I see on the markets. So we're going to start by reviewing my trading journal. You can see my profits are starting to rise a little bit. The very interesting reason for this is not because I made any trade. It's because of the euro to dollar exchange rate. I measure my performance in euros because I live in Eurozone, so I try to get the best return in terms of euros. But I could also measure my performance in dollars because the dollar is the world currency and the unit to measure everything in the same currency. Right now, my holdings are going up in terms of euros, but it's just because the euro to dollar exchange rate is going down. And we're gonna talk about this in the video, in the technical analysis next to the video. So you can see my account since the start of the year. I'm at minus 0.68% of profits. At some point I was at minus 2%. So when I told you that being at minus or plus 2%, 5% is nothing interesting, you're not going to make a performance. The performance gets very, very fast. Like if you're minus 5%, you could get that in one trade in the good market conditions. There is no reason to be afraid or to rush the markets when the market conditions are bad, and you need to find the assets that have good market conditions, and that's why I'm trying to find in these videos. So we're going to go with the technical analysis of the most interesting things to watch this week and in the next weeks. I'm going to repeat some things I already told about the last videos, but it's always good to repeat if somebody was not here. Many people are looking at gold. I'm not the only one to talk about it. If you're on the financial social networks, you probably have heard of gold trying to make something. This kind of chart is really beautiful if you are into charts. The only thing we need is the price to go above the previous all-time high, and that would make a total validation for the run. And for gold, what people need to understand is that the cycles for gold do not happen like in hourly charts. People might, if you're like me, come from cryptocurrencies, you might be used to trades that you are looking at on the 4-hour time frame. But for gold, you are looking at the very, very long term in quarterly. So there, each bar represents a quarter of a year. If you zoom in and you get the monthly, you get a better view, and it's like it will be the equivalent of a daily chart for stocks and a 4-hour chart for cryptos. So each asset has its cycles, and you can't look at gold on the daily. It does not make any sense. Gold cycles are very long term. So I'm going to plot my lines onto this just to give you an idea. You can see that we are really starting to make a beautiful pattern, and we are seeing movement on the upside. But we had the first start of the new bull market right there with the extraction of base. That was pretty beautiful. It was in May 19. And now we're trying to make another base extraction right there. We're trying to get out of this range because right there, what it means is that people start to accumulate and the accumulation stops and it needs to resume. So people start to accumulate again so that we get nice moves like this with low volatility, and that's what I'm looking for as a trader, is to catch the upside movements with low volatility, because I don't really like volatility. I want my holdings to be not volatile. I'll show you after that if you want a low volatility uptrend that is very interesting. But you can see right there that it's pretty obvious that this level of the 1900s is becoming very, very important. Last week, during the start of the war, we were going above, but as you can tell, we are not looking at daily charts for gold. You might be looking at for what's happening when you have very interesting moves, but it's not. You're not. I am not, and people are not taking positions with the daily chart on gold. And you can. I don't think you can day trade gold. It does not make much sense. So my big question, and nobody knows how it's going to be. The only question we can ask ourselves is, what do we do when it will happen? If we get rejected on this level, like we got one time, 2 times, or we're going to get rejected a third time, I don't know. if we get rejected and continue the consolidation, I will stay in my trade. I might get out. I'm in trade in gold. Just to be clear, I own Pax Gold, which is the gold crypto, and I own a gold ETF listed in Germany. If we get rejected and keep consolidating, I'll stay in the trade. If we keep going up and remove and start again the bullish trend, I'll keep being in my trade. And if we cancel the bull market by going back into the triangle, into the consolidation range, I'll get out of my trade and wait for a new good opportunity to settle. It's okay for me to focus on this. I'm also looking at other precious metals, but yeah, gold is the most beautiful, and there is nothing much to say apart from there is this big resistance. If we manage to get above, I think many people are going to get it. It will be the sign of many people being interested into gold, and the bull market could resume for the next 3-6 months. In the next year, it would be very good to own gold. Also, another commodity, petroleum, oil, managed to hit the $100. Many people thought it would not be possible. Many people thought it would be possible. If you listen to what people have to say, you never take decisions. This is oil over the long term. You can see we have data going back. This is the American oil. We have data from 1862. Yeah, not 19. I'm saying 1862. So very interesting data on TradingView. Anyways, oil prices will just keep going up until we don't have any certainty over the oil supplies, because as oil supplies shrink with all the wars and the problems that the world has to face, oil becomes more rare and people anticipate, so they buy more and more oil. We are going to be very overextended. The momentum is very, very strong. If there is no consolidation, that would mean that the momentum is very strong and people are really panic buying into oil. So yeah, we are finally reaching this 2014 region. I was really thinking we were going to reach it by the momentum this trend has. The only issue is that I can't ride it because I did not enter here. The ideal entry for me would have been here according to my trading plan, but unfortunately I was not looking at oil. I was looking at Bitcoin around this period, and the trend, I tried to do something, but the trend is just too volatile. I tried to buy here, and the trade did not come good because I was stopped around there. So yeah, it's hard to trade trends like that, and maybe there will be an entry point on the future. But anyway, I'm trading oil stocks, so that's still a good thing. So we have commodities going very, very good. I'm showing you the CRB Index, which is another commodity index. You could just look at every single commodity index, but this is what it looks like. It's absolutely crazy how commodities perform during these times. Pretty much everything is going up. You have agricultural commodities going up. You have commodities of precious metals. You have base metals. A lot of things are going up. I'm looking at right there food commodities, like agricultural commodities, and you can see we're going to go for performance, and you can check the year-to-date performance or the 3 to 6 months performance, and you can see many of them are in the double digits green, which means that they are in quite a good trend for food prices. You can see soybeans, wheat, rice, soybean meal, soybean oil, you have corn, you have coffee, and you have milk, which are in pretty good trends. So yeah, if you are interested into commodities, go by yourself, check the markets. There are different ways to do it. You could go in TradingView here. You go to markets, you go to futures, and you have different futures. You have agricultural futures, energy futures, currencies futures, metals futures. So if you want the agricultural, just click right there and you will come to this page. And you also have access to this windows right there. You can change to go to energy, and you can see, click on performance to see the performance of the energy futures you have on TradingView. That's what for the tutorial. I may be doing a standalone video as a tutorial for people who don't know. Other thing I want you to know is stocks keep being pushed to new lows. This is the Stocks 600, which is the reference index for European stocks, but it's listed in euros. And as I said at the beginning of the video, euro to dollar exchange rate has a big importance in the price of this. So we're going to check this index in dollars so we can compare all the prices. If you look at the price of oil and gold in dollars, you need to compare different assets in the same currency. If you compare dollars with Indian rupees and Russian ruble, this is not going to make any sense, because people might think that, well, the currencies are not volatile, but yeah, they are. For example, euro to dollar lost 30% in 10 years. So 30% over 10 years is very, very important. Over the short term, people might not feel it. People might think it's not important, but over the mid-term and the long term, it becomes really important. And if you're familiar with momentum, you could see that after the COVID crash, we had a nice bounce, upward momentum. When people stopped buying around February to May, we had a neutral momentum that is displayed in the chart by this beautiful range that you can make a better range. And now we are starting to make a bearish momentum, selling momentum. What that means is that over the first period, people are getting in the market. Over the second period, people are no longer getting in or out. They're waiting for the decision to be made. Then over the third phase, people will be getting out of the market, and that it's going to trigger maybe a correction. And the trigger for that correction is the breakdown of the support right there that we made last week, and we are trying to continue this week. If we make what people call a fake breakout, this will mean range again. And if we confirm the downtrend, that would be, well, very sad. And an example of an asset class that already made this cycle is ARK Innovation ETF. You can see that you have the up range and down. So very universal way to look at markets. If you look at the NASDAQ, you could tell the same thing. Maybe we are entering in a corrective phase. I don't know. We're going to see what things do. But stocks are really not the way to go. Growth stocks. Some value stocks look good. I look at some sectors. Where's that? Mining stocks, because of precious metals and industrial metals going up, the price of the mines, the companies that mine them, are going up because, well, people anticipate the mines to get more money. If the price to operate is the same, but the price you sell your product is bigger, you are going to make more money, and thus your company is more valuable. And thus the price increase, the price of the underlying stock increases. You can see that, with the signal we are having, of course, in this market, as I said in the beginning of the video, you can go hard in this market. Nobody should go hard in this market because probabilities are very low. We are not in a market that has very strong uptrend. We are in a market that has slight uptrend, but judging by the volume that these ETFs and all these companies have, it's pretty crazy. You have metals mining global ETF, and you have more specific, like copper miners, for example, which focuses on copper miners. You have GDX, which is gold miners. That is less bullish than copper, but that needs to break this resistance. You have steel ETF, which is looking quite good, considering it is breaking out of a massive downtrend that is here since 2013 and even 2008. And you can see that it managed to get above this level, and people are buying it down here, which creates a lot of demand. And yeah, it might be the start of a possible trade. You have XOP, which is oil and gas exploration and production. Very interesting. You have a pipeline ETF, and I believe it's PSCE. Yeah, look at this. Small cap energy stocks have not done anything, and they are now maybe printing some kind of takeout base. This could be a beautiful takeoff base for people who like this kind of trading. There are stocks that look much better than this, but look at the volume. Look at the volume here. Look at the difference between the volume before, right there, and look at what's happening right there. This is absolutely incredible. People are pouring money into this, so I'm looking at it in a very, very, very close way. My holdings are not very different. I was talking about a very stable and low volatility bullish trend. This Frontier Lithium trade is a very, very good trade. I love this one. still, I'm not making money on the account I'm trading it because I lost more than I made. But this is the kind of trade that when you do it in the good market conditions, and if you manage your risk very well, it's giving me like maybe 10 times what I was ready to lose. So I put, like, if on this trade I was risking $100, right now I would be making $1,000 with risking only $100. That is a very, very, very lucrative trade. And you can see that the trend is just beautiful. You make down lower, higher lows, and they just bounce, like lower low bounce, lower low bounce, lower low bounce, lower low bounce, and it just never gets a higher lows, and it never gets a lower low. That's the definition of an uptrend. And you can see that the chart is very, very beautiful. I'm really paying attention to a breakout of this area, and I might add some over the breakout of this little base if the market simply confirms. I'm also holding a corn as a commodity trader. Don't pay attention to the trading. I'm not taking profits yet. It's just to remember my entry point and my stop loss. My entry point is the white line, and my stop loss is the red area right there. Very interesting. I also own the gold ETF, as I told you. Very interesting gold ETF priced in euros. And I bought, as I told you, for mining stocks, I bought Freeport-McMoRan, which is the biggest copper mining company in the world. Let's see how the markets react. It's a very small position. I'm risking 0.5% on this. Very, very cautious. Interesting chart. Cup in the handle, strong uptrend. Sector is bullish. So yeah, we'll see that in the course of the week. One thing I'm really paying attention to is the euro to dollar exchange rate. We're gonna take a look at the IDC chart to get more history. Sorry, euro dollar. Right there. This one is better. The chart is cleaner, and you get the very long-term history all the way back to the 70s after Bretton Woods. So it's very interesting. You can see that the euro dollar is over the. Look at the long-term view again. This is the kind of asset that you should be taking a look at long-term view. You are in the massive consolidation right there, and what I'm afraid is that because of the issues going around in Europe, we break down this consolidation phase and might get back to the levels euro to dollar was in 2000, and that would mean massive devaluation for the people who own dollars. It would mean 20% taken out of their purchasing power. What does that mean? Well, you hold, for example, euros in an account in Germany or France, your purchasing power will lose 20%. Well, if you have kept that money in dollars, you would have made no money if you live in dollars. But for example, as a person living in Europe, if you put your money into dollars, you will gain instantly, well, not instantly, but over the course of the devaluation, you will gain 20% purchasing power in Europe. This is a little bit technical. This is like how people trade forex in different ways. But for people right now, seeing what's happening with Russia, I talk about Russian Rubble. You can see that what I was talking about is happening. Russians are losing completely their purchasing power. Their money is being destroyed by people selling their rubles to dollars. So, not telling the same thing could happen to euros, but I'm telling you that euros might be on the road of devaluation. Then I'm paying close attention to this. So by looking at the weekly, you're seeing that now we are in a choppy period that people really don't know what they're doing, just like we were right there and just like we were right there. And the thing that I want to pay attention to is really just wait for the confirmation. Like we'll see just the price starts to go up or the price starts to go down. And that will be a moment to either sell or buy euros. So yeah, I'm paying attention to this. The dollar index is looking neutral. Like over the long term, the dollar index is in a range since 2015, which is mostly composed of euro to dollars. But yeah. So yeah, that's all the thing that I wanted to talk about. Cryptocurrencies are not interesting. I don't know why people. Some guy in the comments, if you're watching this, some person asked me what I don't talk about cryptos. I don't know what you want me to say. There's nothing very interesting. Like, look what's happening since the beginning of the year. I don't know what to say. I don't know how to trade these kind of markets, and I don't think many people can. As a long-term trend follower, there's nothing to do. So yeah, I'm not talking about this. That's it. Thank you for watching. This video was a little long. Hope you were there until the end. If you're there until the end, giving you a special insight to celebrate the 1 year of the channel. I'm going to be releasing a surprise over this week or in the next 2 weeks. I'm looking forward to your reaction over this. Thank you so much for watching. See you in the next video. Goodbye.